All right, so let's get into spotting and following trends. Now, we want to be able to understand why prices move. So the underlying reason why share prices move up is really because there is a huge amount of demand coming in and not so much selling or share supply coming out. And it's because of that that prices tend to be able to lift. If the willingness to buy overhands the desire to sell, then prices will move higher. If you have the opposite situation happen, and let's say, for example, okay, there's so-so demand, but the amount of shares exiting or wanting to sell are 2 times as much, then clearly prices are going to be able to head downwards. Underlyingly, that is the reason why prices move up and down. And so we just need to make that assessment and looking at how they move in charts so that we can get a good sense of whether these trends will continue or not. But at the end of the day, it's really the selling supply measured against your buying demand. If there's more demand buying than there are selling, then that's when you will have the movements of price taking place. So it is the intensity of the buying or the intensity of the selling that's measured here. And that is something that we have to understand. Now, how do trends continue? Trends continue because of sentiment. And what that means is, if the market feels bullish, what is a bullish market and what is a bearish market? A bullish market is supposed to be just like a bull. It charges forward with force because it has so much intensity. It could be that the fundamentals are so rosy that the economy is doing really well. It could be that earnings from companies are just so hard to ignore and that it's picking up quite solidly. And so without the problem being worrying investors, then you have the ability for the market to climb. It could also be because interest rates are low and that the cost of money is also quite available and there's a lot of money in the system that can also keep a bullish sentiment going. But then it could turn the opposite direction or bearish. Now, a bearish market is a market that's heading downwards. It's heading down because the sentiment is poor. There's a lot of questions about the economy. It could be earnings are getting softer. It could be like today that we are suffering because of a particular disease outbreak that's keeping businesses stunted. And until that happens, the bearish sentiment will prevail. And so it's very important for us to understand what is the sentiment taking place right now, because if you understand what the sentiment is, it's very hard for the price to be able to go against that sentiment for too long. So if we've been seeing a rally in recent days, that rally might be short-lived because the sentiment is still rather on the defensive side. And we just have to be careful of what that can offer. So what is a bull market compared to a bear market in terms of the movement in price? So what we have here is what we picture of trend cyclicality, of how a market starts very, very solidly after a period of no interest, starts to hear rumors about businesses doing well, and eventually explodes in price, all the way up to a degree of optimism, instant wealth, and euphoria. But then it starts to be able to fall off, and it starts to sag. Prices start to fall out very sharply. It makes an attempt to recover, but fails to come back to its previous high. And because of that, a major decline starts to manifest. Now people fear, they become desperate. There's a lot of lost wealth in society, which contains the market from climbing. Yes, there could be a recovery, but it'll probably be short-lived because the sentiment is still very weak. And then it starts to fall again until that note of pessimism and the period of no interest comes back out because people quite are doubtful of whether things will become rosy again or not. At the end of a bearish market comes the beginning of the next bull market. And this is why this is one gigantic cycle. I'd like you to be able to use this as your roadmap. Superimpose the charts that you will look at in the future onto this so that you can see where you are in this roadmap. Are you currently, let's say, coming in a place like this, or are you making a temporary recovery, or do we have to do this again later? Or are we now coming to a period of no interest or rumors? I don't think we're here yet, but more likely we're probably somewhere over here into our condition. So use this as your roadmap so you can help guide your hand in terms of aggressiveness. In a bear market, you don't have to be too aggressive, but when the beginning of a bull market comes, this is where your attention is quite warranted and your ability to be more aggressive is more warranted.